Welcome back to my channel. Coming to you today from chilly shores of Oak Island, North Carolina. It might be cold out here, but the QQQ trades are humming along. Last week, I rolled my covered call out to February 28th, bumping the strike up $2 to $517. I also rolled my cash secured put out 1 week to the same strike. Today, with QQQ pulling back just a little, I rolled the put straight out for more premium than I collected last week. A nice little win. Next week, I'll adjust both the put and the call as we get closer to expiration. And since I'm on Oak Island, I couldn't resist sharing a quick clip of some incredible birds from my neighbor, Biscuit Wildlife Hospital. The hawks are doing fine in their flight pen, but the pelicans came inside last night to hang out in the kitchen and stay out of the cold. Now, let's dive into the trades, but not into the Atlantic Ocean.
The extrinsic value of the $517 put has almost completely eroded. It's going to cost me a couple of dollars to close it, and that will be offset by the income I receive for the new contract. I'm going to roll it straight out to a $517 contract expiring in 7 days, and I should expect to receive a little more than $75 for the roll. And then I'll be short a $517 put and a $517 call, both expiring on February 28th. That filled at $75. You'll notice for this cash secured put, last week when I rolled it up to $217, I only received $40.68. And this week, for a straight roll at the same strike price, I got $73.68 for a much higher annualized return. And the only difference I see here is a very small difference in the share price at the point where I set up the contract. So the share price has pulled back just a little bit from 536 to 535, but that is probably the reason that I got a higher premium for rolling it, even though it is still really pretty far out of the money. And next week we'll have two contracts expiring, a covered call and a cash secured put. So my intention is to try to roll the covered call up again and move it closer to being in the money.